If you're buying a home for the first time in today's market, check out my top 10 first-time home buyer tips, or shall we say secrets, every first-time home buyer needs to know. This is a two-part series. I'll reveal the first 5 today, and then be sure to come back for the next 5. Let's get into it. Tip number 1, if you want to buy a house and you're not a cash buyer, you've got to get pre-qualified. I know, you're like, I don't really want to do that. Guess what? You shouldn't get into a car with a real estate agent unless you know what you can qualify for, especially as a first-time home buyer. So we will make it painless. Okay, maybe not painless, but there's just a process that you have to go through, and trust me, when you go through it, you are empowered, you know what your payments look like, you know what your budget is, and then you can get out there and go find that perfect house. Tip number 2, what credit score is needed to get approved for a home loan? Well, this is going to vary based on the loan type. Every loan program has its credit score thresholds. And it's important to know that some lenders will have their own credit score thresholds on top of what the program requirements are. It's good to know that there are programs out there that offer as low as a 580 credit score, but it's really not about credit score. That's one part of it. It's going to be about the credit profile, no matter what your credit score is. Lenders are going to be looking for what's really going on your pay history. So have you had any late payments past 30 days in the last 12 months? Have you gone to collections or charge-off status in the last 12 to 24 months? That's going to make up your credit profile. What are your balances on your accounts? All of that is in the mix when it comes to credit and applying for a home loan. Tip number 3. Now, this is one of my juicy secrets that not a lot of people understand, and that is how to increase your credit score. Right? Everybody wants to know that. The number 1 tip I can give you on this is watch your balance in relation to your limits, especially on all revolving accounts. So for example, if you have a $10,000 limit on a credit card and your balance is $10,000, that right there, even if you've never had one late payment in your entire history of having a credit card, even if when that balance to the limit is maxed out, it's going to drop your credit score. The sweet spot is keeping your balances at 20% or lower of the limit. So in that scenario, at a $10,000 limit on your credit card, you don't want to charge or have a balance running at $2,000 or more, right? You want to kind of keep that balance at 20%, which 20% of 10,000 is 2,000 or lower. And the other big key is just paying your payments on time. Now, if you go past your payment due date and maybe you're in your grace period, but it hasn't gone a full 30 days, that's okay, pay it. From a credit scoring standpoint, when you go past 30 days late, that's when it becomes an issue, and that's when it starts to impact your credit profile and your credit score. Tip number 4. You don't need to put 20% down. Now, if you haven't and that's what you want to do, great. But so many people I talk to, especially first-time home buyers, think that they have to have 20% to put down to buy a house, and that is just not the case. That is just a crazy myth, and we got to debunk that today. There are many low down payment programs out there. There's some down payment assistance programs out there. Lots of different programs to help you get into that house for less than 20% down. Tip number 5, down payment funds. A lot of people think that it has to be your own money. Here's the secret. You can use your own money. It can be a gift from a family member or relative. You could borrow it against your 401k, or you could look at using approved down payment assistance programs. Down payment assistance programs vary across the city and state and country. In general, they are there to help buyers purchase a home. And so those down payment funds can be used for down payment. Sometimes they can be used for down payment and closing costs. And there's rules and criteria that each of these down payment assistance programs have, but it is a great option to explore if you don't have any money or any other resource for a down payment. At this point, you might be thinking, this is sounding pretty good. If you're ready to see if you can pre-qualify for a mortgage, click the schedule link below to schedule your free 15-minute consultation, and be sure to come back for my next 5 first-time homebuyer tips. Trust me, the tips are getting better and better.